This fall, the brightest minds in finance will flock to Florida for a weekend that will change your life, with insights from the brightest stars in the financial universe and an event that will bring them all together. Presenting the first annual T3 Live Finance Festival at the Mayfair Hotel and Spa in Coconut Grove, Florida, for a weekend you'll never forget and memories that will last a lifetime. The Finance Festival, a Todd Harrison production, brought to you by T3 Live and TradeStation. A portion of the proceeds to benefit the Ruby Peck Foundation for Children's Education and the Crohn's and Colitis Foundation of America. Friday, November 6th to Sunday, November 8th, 2015. Bring your spouse, tell your friends, make some noise, and take charge of your financial future. It's gonna be nuts. Space is limited, so act fast. Early bird discount registration ends August 31st, 2015.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Hope you had a great Labor Day weekend. As you wake up, you turn on the TV, you look on your computer, you see futures are up 35 to 40 handles. Isn't that kind of cute? Considering last week, Thursday, Friday, if you turned on every media station, they were warning everyone, to being long over the weekend that something crazy could happen in China once the military parades were over. But usually when everyone is on the wrong side of the fence, the market wants to make everyone look, as bad as possible. So anyway, today you look at overseas, you're getting a tailwind versus a headwind. You have the Shanghai up 2.9%. You take a quick look at the chart here of the ASHR. Actually on the VTF we were talking about going against the grain and buying some calls for the weekend. I think some guys did. If that's you, congratulations. Now the question is, what kind of bounce do we have? You're seeing a move right back up into resistance. Okay, this is your 33. And then perhaps maybe you see if this gap gets filled. And if you were taking it for a trade, that's all it is. Because as of now, still very, very broken, but there is some room to bounce. And you're seeing that bounce. So if you're positioned in for it, congratulations. If you didn't take the risk, you don't deserve the reward there. As far as Europe, the DAX is up, I think, 2.1%. The HEDJ looks very similar. You have this lower wedge type area, and the question is, can it take out resistance? Okay, I have a feeling we're going to be talking about this a lot in the morning call. Can this, take out and close above this little spot here, which is around 58, or does it get rejected there? Because if it takes that out, chances are there's a little bit of a bigger spot coming into, the 50, what is this, like 59 to 60 area. So here is an inside wedge, and the question is, does it fail at resistance, or does it, head into there, close well, and then take it out in the coming week? And I feel like that's going to be the entire mantra of the morning call. I was going through 20 to 30 stocks while I was writing my note this morning, and every single sector has this lower wedge type triangle. So at this point, all you could do is write down points of resistance to figure out, do they get reclaimed or rejected? And then you could look around, the landscape to figure out if any other stocks or sectors are doing so to give you clues that it could even happen. So anyway, you go to the chart of the SPX, and you will see exactly what I'm talking about as far as this wedge. Okay, if it comes up. If it doesn't come up, I'll go to the spiders. Spiders might be quicker. Okay, here are your spiders. All right, remember way back when, it feels like a land far, far away, you had this range break. This was your range break at 2040. Last time you had a wedge type pattern, it gave you some clues that something was going to happen, and it happened to the downside. And that was after 7 months of sideways action. Okay, that was when we took out all the moving averages to the downside and closed below the 200-day. That was enough warning to get out of the way for a move that went from 205 down to the lows here of 182, which pretty much coincide with those October lows. So for the past 2 weeks or so, we've been trying to figure out what's next, and so has the entire world basically. And you've had this pattern of indecision, which is what happens when the world doesn't know what's next. And the way what it's called is it's a wedge. All right. So now the question is, as we open up into resistance, do you short versus 198? Maybe. Okay. Or if it takes that out, can it hit as high as 199.84? And how much of the gap holds? So the way I'm going to treat this gap today, because I come in flat, And I was thinking what to do on Friday, and I was like, you know what? I guess we could have been down 35 handles the same way we could have been up. So with this type of action, I feel like there was enough, there's enough opportunity in your day not to take a big risk. And if you went home long, congratulations. You're starting your day really easy. If you were cheating to the short side, you too have to figure out, do you just salvage the trade or do you add? And if you add and then the market doesn't pull in, how many days are you going to roll your shorts up, which is something that, was a phenomenon from 2011 until now. So does that continue? So the first 30 to 60 minutes, what you want to do is you want to see what happens first. Like the spiders, I think right now are 196.5. Do they push to 197.5 and then come off it a little bit, and then you could short verse 197.50 with that as your stop? And then if we happen to retrace and sellers, could sell this strength, maybe you get a nice short, or do we open around 196.50, pull into 195, hold there, come off it, and do you think that that now holds as far as the gap, and we continue the upside, but you don't chase it and you buy 195.50 versus 195, and then if the market continues to hold up, you could position into longs that way, and you could also position into shorts that way if you come in flat. That's how most traders are going to deal with it. So if you look again at the spiders, you will see the only points of reference you have, you have 198.05, which it's well below, and then you have this 199.13, and then you have 199.84. If they happen, if the opening gap fades, which I kind of think they're not going to be able to fill this gap, but I've seen crazier things. Then on the support side, what you have. You have 190.161, 190.73, and then the lows. So here is your wedge. And then how we close today will also give us some clues on perhaps what to expect a little bit more the rest of the week. So here is your wedge. That is your spiders. And we'll have to figure out together what to do in the first 30 to 60 minutes. And then also if you're short, you have to figure out the same thing. So as far as sectors for clues, the cues I would say have given you a little bit of relative strength. So maybe we turn there to see, if some of the wedge type strategies you have here or setups can resolve. The cues also broke their uptrend, okay, right into here. That was, a pretty big active uptrend that was broken. You had also another little point of reference here, and there was your symmetrical triangle, and it's been below it since. This big support basically, has been resistance. So you go and you look closely now at it, and you will see what you have here. You also have somewhat of a, in here, well, I'm just going to make it lower like this, an inside wedge. But look how much resistance is on top of this. So with that being said, you draw your little trusty lines, and you figure out into today's open what level can hold. This resistance here you write down as 105.02. Okay, if we brush up against it and it stalls in front and digests the big gap for a little while and pushes above it, maybe some guys will buy that. If it pushes through this fast and gets up to the 200-day and gets up to bigger resistance closer to 106, maybe people will try and short ahead of that. But here is your resistance zone to figure out if the bears have enough power to contain the rally. Okay, then obviously here's your support side, but I don't know if that's going to come into play unless we fully fail, and you'll have more than enough time to, to look at that. Just a quick look at some other sectors. The bios have been a two-way trade. A lot of guys have had a decent amount of success. When this broke this trend line to the downside with this head and shoulders pattern, the left shoulder, the head, your right shoulder, broke here, giving you a nice measured move all the way lower. If you took that, congratulations. And now this too has a mid-level type of wedge type pattern here. So it'll be interesting to see, can the bios regain a little leadership or not? So, just on a quick note, you just take this and you draw this sideways. Okay, that's one resistance, and then you come in this way. So you have a point here at a 349. I think it's got some room between here and there, and that's when the shorts might try and put it out again. But if this area starts to get reclaimed and doesn't get rejected, then you have a bigger area, and that'll also help us somewhat figure out how to navigate. Do you have to be long and reposition into multiple things, or does selling resistance continue to work and buying in the hole continue to work? Because that typically happens until you get another resolution. We saw that for 7 months in the S&P and a lot of names out there. So with that said, do we need more time in here with the Fed September 17th? We're only September, 5th or so? So there's a lot of time there. So talking about stocks pretty much look exactly like a lot of the indices. So you look at something like Apple, which has a catalyst, perhaps. You have this, this refresh event that's coming out on, I think, tomorrow. Here was your range that broke to the downside. Remember that range that everyone was maneuvering that drove everyone a little batty? Well, gap down after earnings. Guys got probably short, maybe reduced risk, big move lower. So now the question is, what's next for Apple? At this point, you could draw, a little bit of a downtrend here, right? This is a little bit of a downtrend that maybe it takes it out and tries to retest the 200-day. But here, what does this look like? Oh my goodness, another inside wedge, another one. How could that be? Okay, well, that's what happens. After a move lower, people don't know if it needs to retest these lows or can resume or bounce back. So, point of reference is here. You have 112.78, and then you have 114.5. So if it gets into 112.78, reclaims it, holds above it for, a majority of the day, maybe you get that. A close above this, who knows, maybe even get a little bit of higher prices into the event. Typically, everyone loves to sell the event, but this event's been so downplayed and hasn't really rallied into it. So, we'll see where we are on the close, and we'll see how it acts today to figure out how to position for that tomorrow. As far as, two other, I guess, stronger names, Google and Amazon haven't been special, but, it'll be good to see if they could reclaim some zones. You look at Amazon, you kind of have, I would say, a little choppy type of downtrend that you could draw here. Here it is, okay, that's your downtrend. It did get tight and held above all the moving averages, which is something a lot of stocks haven't done, so Amazon is still a leadership stock for you. There is some resistance if you want to take a closer look. If you're in it long over the weekend, congratulations. If you're shorted, you got to be careful. If you're not, not in anything, you have resistance here at 515, and this is probably 513. So, people might try to short right here, but I would be careful because if this market does want to push higher this week, this trend line probably gets taken out, or maybe leaves, at least it reclaims these moving averages. So, watch to see what happens there. Google has been a little bit more loose and wide, not the easiest thing to deal with, but it too, has somewhat of a downtrend here, and it also has a bit of a wedge of its own, looks a little different. So into this resistance, see if it gets rejected here. If all you want to do is short things, well, shorting into this spot has been working better than buying it. So see how that happens today. Netflix used to be, buy every dip, and it's turned into a two-way trade. Last week got a little weaker when news came that Citron actually is shorted. See what happens today. I guess sellers are going to probably try and come in and sell this because it's up with the futures. I would say here is a resistance area, if that's you, 104. And then, you have a bigger spot here with the moving averages right there. So, resistance 1, resistance 2. I guess, sellers will be coming out to try and test this stock today because it was weak last week and it's probably up with the futures. I'm going to see, do the sellers have control of a weaker stock lately, because this is below the moving averages. It's traded lower. So see what happens here with Netflix. I think it'll be interesting. But if the sellers do come in and they can't take it red, and you have some uncommitted shorts, it could cause a nice size squeeze. So, there are two sides of that coin. So I'm going to be watching that if sellers do come in and it doesn't go lower and just say the futures go lower and it shows some intraday relative strength, chances are you might get a push. So it's worth watching both ways. Tesla looks pretty good for itself, held above most moving averages. You also have somewhat of a downtrendy wedge type spot. It held in a little bit higher. Can a stock take out its descending channel here? It failed there. Will it fail here? To be continued. So 247 to 252 is that spot, and if it takes that out, the 50-day is right there at 255. So again, this could give you some clues. There are a few stocks that seem as if they could make an attempt to take out bigger resistance. So we could see if these stocks do that, maybe there's a little bit more upside in the indices before sellers can come back in. If they can get rejected, that'll tell us, okay, we're still in this range, we still need more time, et cetera, et cetera. So people have been asking me about MBLY. MBLY has just pretty much been out of play, rightly so with the way the market's been. You did have this technical breakout failure. I remember I was long and I got out on this day, and then since then it's been a trade like everything else, but it's still above the 200-day. So if you have it in the drawer, I would say keep it there. As far as a calculated setup, not much here right now. You had a lot of calculated setups before this with the descending channel break, when it broke above this, when it broke above that. Now it's trying to just work off a huge move, and when you're in a weak market environment with an expensive stock, it needs some time. And as of right now, it still looks okay. Just you don't need to be all in. Just continue to what you have it in the drawer if that's you. Facebook in the social landscape, still best in breed. This also is something to look at today. Can it reclaim bigger areas? Can it reclaim this 90 zone? It also has an upper type wedge type pattern here, well off the lows of that crazy Monday. So if there's something that can give some clues that, that you could buy high and sell higher, it would be Facebook. But you need to see what happens here around this 90 to 91 zone. Remember when it broke this little wedge right there, that gave you some clues that all leaders were being sold, and hopefully you took that clue to get out of the way here so you were able to embrace some of that volatility. Twitter acting a little bit better, ever since that little reversal off the lows, you've seen a little commitment to it. You draw your line this way. Now it's been doing some work above 28. Question is, can you see a move above this spot to maybe, fill this gap a little bit higher? It looks okay from down here, nothing special, but some are pointing to a little bit of a inverted head and shoulders pattern, left shoulder, head, right shoulder, 29 neckline. That would give you, a bit more upside there. Remember last week that feisty move in oil stocks. So in order for the market to have a broad-based move, you need some participation from even the sectors that have been broken. That was probably the first true sign that oil might have put a real low in. You look at the USO real quick. Here is that feisty move, that 3-day move that broke this descending channel here. If you bought day 1 and you sell day 3, which is usually my day count rule, congratulations. Now look at this. There's an inside wedge here, so it's been holding up, didn't just fall apart like it's done in the past. So, see if that continues. I think, this is your line in the sand. If you're long, it needs to hold somewhat above this. What is this? This is 1416. And then if it doesn't go sideways, maybe there's a little bit more continuation to that move that would probably help the XLEs, which also had its move, but this has been, look at this downtrend, my goodness. Guys, just to write this down, when things break their 200-day moving average like it did right here and doesn't reclaim it, it's not investable. When you're in active trade and you look for other clues, here is your head and shoulders top with the left shoulder, the head, the right shoulder, broke the 8 and 21-day well before the 200-day. So lots of clues to get away from this sector, and now look where it is all the way down in the doldrums. So if you were away from it and you've been looking to see if you could get more than just a day-and-a-half trade, this will be something that you should be watching. Today we'll see what if it participates in the bounce or gets sold. Here's that gap that we talked about. In order for this to have any attention still on it, it's got to hold this, and that right there is 62.45, and it's been doing a little bit of that. And then here is your resistance right there. So really what's happening this morning is you've had this wedge type pattern being built in most indices, most stocks. No one truly knew which way we would open this morning. Would we be opening to the downside of it or to the upside? And at this point, we're opening up into the resistance zone. We just mapped out resistance pretty much 1, 2, and 3 to figure out, can you short verse that resistance, or does it hold right in front of it, digest a little bit and push through it? What's stocks and sectors that can give us some clues if that could happen, like your Facebook or your Apple, or even watching your your Google and your Amazon, or do these things not have enough power to do it? Because if they don't have enough power to do it, I'm sure the indices won't as well. So, with a big gap up like this, you don't want to just blindly short it on the open, the same way you don't want to just blindly buy it. Within 30 to 60 minutes, you'll have more calculated setups. And then by the end of the day, we might even have some more clues if we could, play or stay in something for multiple days versus, the day-and-a-half moves that we've been seeing, or minute to minute or hour to hour. If you're a macro player, we've talked about many times, just stay the course. This will help your average cost. Keep going in your 401k, keep putting it into your 529. That's a lot different. You do it every month. You do it in indices, and over time, that's worked. If you trade actively for cash flow and P&L, You got to make sure that you analyze these levels, you look at what's going on globally, you use all your resources, and then you continue to put days together on your P&L, and hopefully that pays your bills at the end of the month. So a new week, upward start. We'll see if it holds, and we'll measure it throughout the day. Have a good one. I'll see you at the recap.